The White House is telling Americans they have laid the groundwork for the U.S. economy to fly high next year. And President Trump says it is already showing up in the data.
We're doing numbers that nobody's ever seen. We have $18 trillion coming in. We had a 4.3% GDP. They thought it was going to be 2%. And that's despite the Democrat shutdown. Had the shutdown not occurred, we would have had an extra 1.25 points.
Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-host, Dagan McDowell, independent advisor Jonathan Hoenig, and with us for the hour, Fox and Friends Weekend co-host Griff Jenkins and Endeavor PAC founder Tiffany Smiley. Great to have everyone here. And it is not just the president. America's biggest banks are growing optimistic on 2026. Goldman Sachs economists are predicting real GDP growth above consensus at 2.6%. Analysts say that the Republicans' sweeping tax cuts, lower interest rates, more trade policy certainty, deregulation, and AI will all power the economy higher in the new year. All right, Jonathan, let me come to you on this first. So this is sort of something that I feel like we've been talking about, where 2025 was sort of the scene setting, right? Setting the stage for what is hopefully going to be a booming 2026. Do you buy that theory, and do the equity markets also buy that theory?
Well, I mean, look, the equity markets have spoken. This was a terrific year, not just for U.S. stocks up, 14, 15, 16%, but international stocks as well. What I don't understand, and look, the president's right as well, the GDP beat expectations, but why aren't more Americans feeling it? Harris had a poll out. You've got about half of Americans saying that their financial situation is worse now at the end of the year than it was at the beginning of the year, and consumer confidence numbers are also near multi-month lows. So there seems to be somewhat of a disconnect here. You've got a lot of the economic numbers very positive, but a lot of Americans simply not feeling it.
Tiffany, why is that?
Well, my first thought is, are those polls being conducted in blue states, where you sort of have these governors who are, taxing people through gas? Some of the highest gas prices are still in blue states, but gas prices are falling overall across the country. The Goldman Sachs prediction was encouraging to see. I think it's about time that we just tell the truth on what's going on. I don't care if it's Democrat or Republican. Tell the truth about what's really happening with the economy. I was just talking to some bankers at Drexel Hamilton, great guys, 100% disabled, veteran-owned and operated bank. And they said, you know what, we're bullish on what is going on. We are excited. This hysteria with the tariffs and all the fear-mongering that was happening. Now that's sort of being swept away. It's like, okay, it will take time for the economy to hit the American people's pocketbooks, but it's happening.
Griff, some of the, I don't want to say concerns, but I think the disconnect is real wages were so negative under Biden as inflation was outpacing any raise that I got at work, that even though that trend is reversed and real wages are positive, I'm still trying to dig myself out of a hole for a year. So I still feel underwater. And frankly, it's just going to take some time for my real wages to catch up to grocery prices, to catch up to gas prices that are coming down. I think the question is, can you do it in time for the midterms? And how long does that process take?
Taylor, that's a great question. And, you ask about the wages, the difference between the Biden administration and the Trump administration, that's really key to point out because, as Jonathan was pointing out, people aren't quite feeling it. But here's the difference. Under the Biden administration, the legs of the economic stool of Bidenomics largely was geared towards government jobs. They grew government jobs. Under the Trump administration, that economic stool, I would say, has four legs. One is tax cuts. Didn't have that under Biden. Now, thanks to Big Beautiful Bill, big ones are coming. Two is deregulation, major deregulation coming. Number three, under Trump, not under Biden, massive, billions upon billions of private industry investment happening, certainly in the AI sector. And then the questionable leg is tariffs, which everyone said was going to lead us to a recession or at least an economic slowdown.
Not everybody.
Not Dagan.
Not everybody.
So
I didn't even think that we on this show, because you don't watch it clearly.
It's true. But
We
and you were right.
never even thought they were inflationary.
See, this is why I'm so happy to have Dagan back. I actually really did miss you last week. I
200 billion plus in investment
Yep.
that the tariffs have brought in. So at the end of the day, I'm glad to see Goldman Sachs doing this because I'm optimistic I will be able to recruit investors in 2026 for my robot clothing line.
Oh, great. Series A funding round starting right now.
That was a reference to something that Griff said yesterday about the robot clothes.
Yes.
I missed it and had to get caught up. But Griff's going to be launching a line of robot clothes.
We were talking about on the show last week, robots are such an important thing to watch economically. Tesla is not worried about cars. It's all robots if you watch what they're doing. And I think that likely in the next 10 years, robots are going to be a major part of our life. That's the sort of things, we didn't see that happening under the previous administration. Now you're seeing it under the Trump administration. You can bet if there's a boom in robot buying, the president and this administration will lean into that.
And then you need clothes for the robots. Dagan, we hand it to you.
Maybe Elon Musk can go to communist China and make robots and essentially hand that technology to the communist government like he did with electric vehicles. That's why China's leading on EVs.
We need American-made clothing for those robots.
No, but that's what happened with Tesla and the electric cars. There's a lot. There are great tailwinds for the economy. One, because the Republicans, with President Trump in the White House, are clearly worried about the midterms. So maybe expect juice of all sorts for the economy to try and mitigate a blue wave. Not that that's a great thing, but that certainly could help people. Data centers, you want to talk about, I can save it. We could talk about data centers spending, the infrastructure spend for AI data centers. It was, and Taylor she has that chart that she showed. The first half of this year, data center construction accounted for almost all of GDP growth. It was roughly 92% of total GDP growth. By the end of this year, it's fallen off to about 40%. And it's not necessarily a pullback in the data center spend, the infrastructure spending. It's other parts of the economy catching up in part, which is good. And then tax cuts. Not just the one big beautiful law. There are already 9 states that have no income tax at all, but there are 9 states that are cutting individual income taxes in 2026. And we can talk about this as the show rolls on, but well, guess what? It's not blue states. It's Georgia, Indiana, KY, Kentucky. Well, that's kind of they've got a Democrat governor, don't they? Bashir?
Yes.
Kentucky, Mississippi, Montana, Nebraska, North Carolina, Ohio, Oklahoma. Boom shakalaka. That's going to be great for those areas of the country.
And I'll just mention another tailwind, in addition to all that you mentioned, Griff, is the deal making we've been seeing going on this year. Record deal making, and that demonstrates the U.S. economy's flexibility, adaptability, the fact that M&A is healthy, that companies are willing to make multi-billion-dollar investments. My one hope, if I have a Christmas wish, is that the antitrust division of the Justice Department leans down a little bit. I mean, we saw a company go bankrupt this year, iRobot, because its acquisition from Amazon wasn't allowed to go through. So we need less antitrust, more M&A to keep this economy moving, adaptive, healthy, and strong.
And how screwed up was the Biden FTC under Lena Khan that prevented that acquisition? That iRobot is now in the hands of a Chinese company.
Right.
So China, communist China, will have the data that those robot vacuums collect from American homes.
And an American company that wanted to buy it wasn't permitted because of government intervention.
Right.
Well, and I think that's what's not talked about enough is just how far, in the Biden administration, how far he took our economy to the brink. We were on the edge, and President Trump came into office and took a multifaceted approach, which is hard for the markets to regulate to, but it's a good thing for the American people and building that resiliency to carry into 2026.
Yeah, and to Jonathan's point, I mean, I was reading Axios today saying that global M&A is over $4.39 billion, but the key metric was it's a 45% boost from 2024. That tells you that people that have money to spend held it and waited and now are acting.
Yeah, I mean, that's one of the concerns, I think, about the tariffs that's been put forth, that people are reluctant to make big investments because they don't know necessarily what the scheme is going to be 6 months or 8 months into the future. The less the president has talked about changing those tariffs, I think the more you've seen big business willing to put serious money into the market.
Jonathan, just quickly, I want to pull up sort of a look at how Wall Street thinks that the S&P 500 will do next year. A lot of the calls for this year were 7,000, on the S&P 500. And next year, it's the same. It's 75 all the way up to 8,000. But is that too much of a consensus trade? If everyone thinks that that's where we're going to go, does the contrarian in you get nervous that we're missing something?
Well, J.P. Morgan, the actual man, the banker, was famously asked many years ago what he thought the market would do. His answer will be my answer. It will fluctuate. I think that's a given. You will see volatility next year. Look, we still have the Supreme Court's decision on the tariffs, not to mention a host of international issues, in the Middle East and abroad. So I think the market will fluctuate, but I do think you'll continue to see the momentum because you're seeing innovation. I mean, look, AI is changing our lives. It will change the economy, and it's changing our lives, and that's what's been powering the market globally forward in 2025.
So we talked about deal making and M&A. We talked about China and AI. So Dagan, I do this one for you. Meta came out and said that they are buying a Chinese-founded AI startup called Manus, but that startup left China and moved its headquarters to Singapore just to try to get away from all the U.S.-China trade tensions. But they're thinking, according to reports, it's a $2 to $3 billion deal. Remember, Manus went viral earlier this year on X after it released what they claimed was the world's first general AI agent, capable of making all sorts of decisions without having to prompt it. And they're saying we're the new DeepSeek of China, blah, blah, blah. Dagan, your thoughts on the technology of Meta buying this? Are there concerns? And of course, all of the claims of we're the new DeepSeek, you were very clear January earlier this year that, you know, all the claims that DeepSeek was ahead of us, a lot of those were unfounded.
Right. The freak out was unwarranted on DeepSeek. Looking at, well, as my dad would call $2 billion for Meta, that's just walking around money.
Yeah.
That's like a $10 bill for Meta. Looking at Meta stock, if you look at the kind of big cap consumer tech titans, Meta, Amazon, Alphabet, Apple, Mr. Softy, Tesla, and NVIDIA, that stock is a dog with fleas. The quarter to date, it's down over 10%. And the next biggest loser would be Microsoft. It's down 6%. So Meta maybe is doing this for some juice going into the close of the year. But Meta has really kind of bit the big one late this year. And I would argue that some of that is that people do not really buy into whatever Meta is trying to do on AI.
And maybe somewhat of a transition here. I mean, Dagan, you've watched these markets for many years, as I have. Big tech led this year. It's led 4 years. The market's up double digits now for 3 years in a row, and it's been largely those large cap tech stocks that have been leading the charge. So if we're starting to see small cap, mid cap, international, that's a positive thing for the market. It shows the market broadening, not narrowing to a fewer and fewer number of stocks.
We like dogs. We just don't like dogs with fleas.